Hi folks, Lee Gettess here with the Market Sense for the week of May 19th, 2015. The charts, yes boss, the charts come from the Trade Navigator software from Genesis. And we are looking at a weekly bond chart here. Bonds are a market that I really believe need antipsychotic medication. My goodness, they're just kind of like all over the place and heavy duty volatility of late, as you can see. We were looking at this 153.28 area there where you see the red line that basically bisects the price bar. We thought that might be important, but apparently bonds didn't think so. They've been well above it and well below it, but they don't seem to be doing much with it. We've got support down here. I believe that is 152.06 is the projected low. And they've been as low as 51.28. They bounced all the way back to 53.22 from there. So, I don't. The volatility is so high that to consider any of these levels to be anything but sloppy close is just silly. I mean, they're just all over the place. It looks like we could get a move back up here to the middle moving average, which is in the mid 156 area. I really thought that was likely this week, and it still is possible, but boy, it's just difficult to figure out what's driving them because it's not just U.S. stuff. I mean, bond markets globally are just on fire both directions. And, the European Central Bank says they're going to do more QE early, and they go up, and then they go down, and wow, it's very difficult to control the risk in this market, and that's the important thing to say. If you're going to trade in this market at all, you better keep position sizes small because the risk is bigger than it looks. Stocks are surprisingly quiet considering that interest rate environment too. They're moving, they're back and forth, but nothing like the bond market, which is a little surprising. They closed rather strong last week and opened pretty good this week. They have been up here near the 2135 area and seem to be holding, which they could do. I mean, it's possible that could come in and hold them, and support down here is just below 2100. That's like 2099 or something like that. That would make perfectly good sense. The long sideways pattern, if they're really resolving it to the upside, and I mean, it looks like they are, but geez, where's the enthusiasm? Where's the buyers? They're up here. Come on. If they do get enthused, you would expect them to be up here at the upper Keltner, which is above 2180. I think that's very possible. But boy, the new highs have been met with nothing. Not a lot of buying, not a lot of selling, just nothing. Like no interest at all. It's a very bizarre market here. But, below 2100 is possible. It's probably a reasonable spot to look to buy if they get down there. And I wouldn't surprise me to see them blow out. I mean, they're making new highs. You shouldn't argue with the market making new highs. But they're not exactly blowing out to the upside. So that's what we've got for you today. I hope you can find something to profitably get yourself involved with and at the very least protect yourself. Thanks for checking in to see what we think.